So for today's trade of the day, we're going to take a look at the 20th of November 2024, and we're going to use playback at 20 times speed just to get an idea about how we could have got on this trade. So it happened just after 8 o'clock as the market had a little bit of a pullback here, testing that middle of the price channel. I'm going to take you step by step through this as we find a buying opportunity because the market is going to test from here. But what I want you to see with this is visualize how those indicators update, how they move, and how you look to take your decisions. Now, first of all, there is a continuation buy trade here. I don't want to focus on that per se, although it does get an earlier entry for us with a stop loss below those lows. I want to focus on the next standard trade that comes in. So I'm going to keep this going 20 times speed on a 2-minute chart. So it's not ordinarily this fast. But what we're looking here is a market more going sideways than anything else. Now, if we're looking for short trades with the arrows on the inside of the channel here, we're looking for price to close below this pink lines. We're not seeing that yet. In fact, what we're seeing is a bounce up, and we're starting to come towards that arrow there. So I'm going to pause it for a second. Let's zoom into what we're looking at for a potential trade. So what are the things that we need? If we're going to take a buy trade, basically we need the price to be in the buy zone. That's above these tram lines here. So that's good, tick. Number two, we need green lines here. The vector average lines both need to be green, and we've got that also. The other thing is going to be to do with the arrow. So the arrow here was above us, pointing down as the price went through that on that bar on the 2012 bar. The price then the arrow then flips to the underside, giving us a stop loss indication for this new trade. However, whilst this will be a standard trade if this arrow is on the outside of this channel, because it's on the inside, we need to just be a little bit more selective. The idea basically being when this arrow flips, it's on the outside of the channel, it's more likely to be a more explosive move. We can take the trade whether it's with or against the trend. However, being on the inside of the channel, we just have to be a little bit more selective for a standard trade. What does that mean? Well, the rule is quite simple, really, that this line here needs to be blue, i.e. needs to be an uptrend, and also price needs to close above this pink line, price envelope 2. Now it didn't do it on this bar, otherwise we'd have got an entry here. It was just underneath it, and this is about trading and following rules, right? So let's monitor it now. What we're going to look for, our entry will be when price closes above this, and all the previous criteria still remain in play. So let's have a watch it. It's looking good. Remember, this is 20 times speed. Oh, it's coming back a little bit. And okay, it closes underneath it. Let's watch for the next bar. If we can still close above it, these lines remain green, we're going to have our entry, okay? And there it happens, okay? So the first point at which we close above price envelope 2, we've got our green lines. We're obviously still in the buy zone. We've got the arrow below us pointing up. There is the buy trade. And we'll be going long on this market at 43268. What's the stop loss here? It's down to 228, so it's a 40-point stop. That's not bad for the Dow, to be fair. That's probably around sort of normal-ish. And in terms of that's where the stop's going to be to begin with. Every couple of minutes, we're going to be moving that stop loss up just to keep tightening it up there. Now, the way in which we're going to run this trade depends a little bit on how you are and where you're at as a trader. Now, if you're quite new to this, what I say to this is, look, we've got a rules-based entry. Now, obviously, if you're not quite following what I'm saying, remember, we do have 5 live trading sessions a week. We also have one-to-one coaching to teach this and reinforce this. But there's your entry. There's your stop. For a target for a new member, keep it real simple. If you're trading the Dow, just go with 30 points, okay? So if we're long at 68s, we're going to be looking to get out at 98s, okay? So why 30 points? Because it's easy to do and because it just works, okay? And it doesn't require all that other analysis. Now, as this trade develops and as you as a trader develops, what you can do is start to manage the trade in a little bit of a different way, because the problem with a 30-point target is it caps your profit at 30 points. And what if the market goes further? How can we take advantage really of that? Well, what we're going to do is a couple of things. What some traders like to do is maybe take half their profits at 30 and run the other half. But what we're going to basically do is look for a material move in our favor. I figure that on the Dow to be sort of 20 points plus, okay? Then we're going to move our stop loss up to a position where we can't lose. Let's pause it here. So our stop loss ordinarily be trailed up here, but that is a material move. We're long from 68s, now we're up at 97s. Our new traders, they've taken profit at this point. They've put a target in and the trade's closed automatically. However, the thing about that is, again, that it caps the potential profit. With the stop loss still all the way down here, if this trade for a more experienced trader were to come back, we could still lose. But of course, we don't really want that. As a more experienced trader, you want to capture more profit, yes, by not putting a target. But what you also want to do is reduce risk. Turn that trade into a risk-free trade, banking profit as quickly as possible. So once you see a material move in your favor like this, what we're going to do is move the stop from here. We're going to jack it right up underneath those lows. And we're going to use those lows as an idea for a stop loss. Why? Because they are natural support points that each candlestick's putting in. The market fell a little bit to here, found support, and then rose. So we can use those higher lows to keep ratcheting our stop loss up. And remember, every 40 points is basically a one to, well, we risk 1.5% on a trade, is worth 1.5% to us. So there's your entry. Okay, we can move our stop loss up now to 75s. We're blocking in 7 points. 7 points may not sound like a lot, but it's a profit. And we there after simply 2, 4, 5 minutes or so. Okay, so let's just resume it. And as I go through this, I'm going to show my cursor where we're moving the stop loss up and why and how we're doing it. Okay, so press play. Again, we're looking for meaningful separation between the live price and the candlestick lows. That's pretty good. Look there, 86 up to there, 05s. That's about 30 points. So we can start to be moving our stop loss a little bit, not too tight, but you know what, give it a touch of room. So that low there, that's exactly the sort of low that we can be looking for to move our stop loss up. So we can move up to 84s, and again, a decent candlestick like that, we can move it up there to 91s. Okay, so let's just keep watching it. Sideways bar here, pretty much a sideways bar here. Yeah, bit of rejection. That's a strong bar, so we can move our stop loss up to here, up to 17s, and all of a sudden we're now locking in. We were long from 68, suddenly a stop at 17s. It's a pretty nice, 50 point lock in. Again, we can move our stop loss up here now to 57s. Suddenly we're locking in nearly 90 points there of profit. Again, another strong bar. We can move our stop loss up again, up to 85s. Look at the low there. Stop still here at 85s, okay, but nice little test down to those lows. Let's just move it up a smidge more up to 88s, okay. That's a sideways bar, so we're going to leave our stop where it is. I need to see material push, pressure to the upside again. If I put my stop too tight, I'm not going to allow the trade room to breathe. So there's my stop at 88s. It's pulling back a little bit here, but we can keep it there. Notice the default, like the hard stop of these arrows is coming up as well, which is great. But for me, I like to have it a bit tighter than that. Nice little bit of support bouncing off those areas there. So let's see if this market can have a little sniff higher. It's trying it. Let's put our stop up here to 06s. And look, we're getting towards the close of the day now. Let's have another look. Decent bar again. Let's move it up to 31s or 30s. Getting something a little bit more sideways. Let's keep it there. And there, we're knocked out of the trade at that point. So let me pause that there. Okay. Now, I know what you're probably thinking is, well, this is all good, well and good, and Adrian, but this is, with the real benefit of hindsight. But, what you're looking at here is a simple process of a formulaic process of getting into the trade. That happens here at 16 minutes past 8. Now, a brand new trader who's putting his target 30 points away with a 40-point stop, that's hit target within 6 minutes, and that's great. What you need to be doing as a trader is, an intraday trader is, not capping your profit. Put a target in to begin with, just to build that little bit of confidence. But if you think about what we're doing here, we're simply using these lows, using separation, between the price rising and previous support to move our stop up, to lock in profit, but still allowing that trade to release forward. And if you think about what a trade like that actually allows us to do, is if we're getting out here at 431, but we're long at 268, what is that? 100 I'm testing my maths here, 180 points or so, 160 points or so, up to that move. So a pretty nice move. And bear in mind that 40 points was our stop loss. If we're making 160 points on this particular trade up to here, that's a 4-to-1 trade. So 1.5% risk of your account basically means an 6% profit on this particular trade. Okay, so the power of trading can be there, and it can be fairly formulaic. When you look at the chart, you're looking at those lows, you're looking to move your stop loss up based on those lows after meaningful movement and locking that profit in. So hopefully that's useful. And you know what, if you want to find out a bit more about these trading strategies that we do here and how we teach traders how to intraday trade the markets and take advantage of these types of moves that take place literally every single day, then what you need to do is get yourself booked in for one of our live trading webinars, teaching you how to intraday trade the markets with confidence.